Hello and welcome to the Global View on this Wednesday. I'm Andrew Gagan. Good to have you with us here at Ausbiz. So let's check what happened overnight. Investors turning risk averse after Iran attacked Israel with a barrage of missiles. The missiles were shot down with the help of the US military, and oil prices surged as investors sought the safety of the US dollar and gold while shunning equities. Stocks on Wall Street falling, with tech coming under selling pressure, pushing the Nasdaq lower. And small caps also on the firing line there. Among the Mag 7, Nvidia was the worst performer, while Apple and Microsoft also suffered. Defence stocks rose, including Northrop Grumman and Lockheed Martin, with the S&P 500 Aerospace and Defence Index climbing to a record high. Energy shares rose, along with the oil price, with ExxonMobil shares surging, while gold stocks followed the price of bullion higher. And the airlines were among those stocks that fell. Well, Israel has vowed to launch a powerful response after it was hit with a salvo of ballistic missiles from Iran in what it says was retaliation for Israel's campaign against Hezbollah in Lebanon. US National Security Advisor Jake Sullivan saying the strike appeared to have been defeated. The escalation of hostilities has pushed US Treasury yields lower. The yield on the 10-year down 6 basis points to 3.73%, the 2-year falling to 3.61. Meanwhile, in US economic data, the job openings and labour turnover survey showed labour demand rebounded 329,000 to 8 million, but hiring was soft and consistent with a cooling jobs market. The manufacturing sector held steady at weaker levels in September, as the Institute for Supply Management's manufacturing PMI was unchanged for the month. Meanwhile, US East Coast and Gulf Coast dock workers have begun a strike, which analysts say could hurt US economic growth, while the Biden administration must also contend with the aftermath of Hurricane Helene, which swept through America's southeast, killing at least 100 people. The US dollar index is up around 0.5%, while the Aussie dollar has fallen back to 68.8 US cents. And taking a look at commodities, oil prices initially spiked more than 5% as Iran launched its missile attack on Israel, with prices then easing as no casualties are reported. Brent futures settling more than 2.5% higher at $73 a barrel. Base metals are mixed, with copper up slightly. Iron ore is down around 1.5% at $107 a tonne. And the flight to safety has seen gold jump more than 1% to $2,662 an ounce. And that risk aversion has seen Bitcoin fall below $61,000. All right, well, plenty happening, particularly on the macro front. Let's get across it all. John Blank joining us from Zacks Investment Research. John, very good to catch up with you again. So, what did you make of the market response to what we're seeing in the Middle East at the moment?
Andrew, a VIX at 19 is not dramatic. Oil prices that, continued up to 75 and then stopped, that's not dramatic. So even, there was, 5 or 6 basis points on the 10-year that bounced around during the day. And, risk off on the bigger tech stocks, risk off on the NASDAQ. In general, I would put it in a garden variety, risk off day as opposed to a major event.
What do we need to watch out for, though? There is obviously the risk that this will escalate further. Israel saying it's going to respond to that attack. At what point do financial markets actually start pricing that in?
It's a good question, Andrew. I think the IDF, the Israeli Defense Force, has got a plan, and they're working it. And the plan is, they took out the political leader of Hezbollah. They've taken out the military leadership. They've taken out all the command and control structure beneath them, or at least degraded it significantly. And now they've invaded southern Lebanon with the objective basically to get 60,000 Israeli settlers back in their homes on that northern border. So they have a very specific agenda here, which is to resettle peacefully those 60,000 settlers. And to this point, they have not really gone anywhere but to effectively assure that mandate. So I don't see it getting bigger than this. And, they are going to respond to the attack from the missiles that came from Iran, basically. But, back when they did this before, the Iranians did this before, they did 300 some. Now they did 180. So that going the other direction, you have to assume that was commensurate and that was somewhat less. So I would think, the response to the Israelis would be to degrade some missile production capability in Iran or something similar, as opposed to escalating beyond that. So my thinking is only that, they're basically trying a very clean strategic objective. They aren't trying to go beyond that. And I don't think they have the U.S. Backing for anything more than that.
John, how is this playing out domestically in the States? We often talk about the October surprise leading into a November presidential election. Looks as though that has eventuated, in fact, on a number of fronts. So the Middle East, you've also got that dock workers strike, and of course, what we've seen in the wake of Hurricane Helene.
Absolutely, Andrew. I mean, look, the longshoremen are taking advantage of the November 5th election. Do I think the Israelis are taking advantage of it? Hard to say. But certainly everybody is well aware of the deadlines, and it forces the Biden administration to act more aggressively in resolving conflicts. So, it's inevitable we're going to get more volatility in October. Now we're starting to see where the flashpoints are. And I expect, if I were the president, I would do what, I'm talking about. I would try to resolve it. So I would expect he would, push the longshoremen to the table after 2 weeks, and he will push the Israelis to wrap up any type of invasion, within a time frame also of 2 weeks. So let's see what happens when we get to the middle of October, Andrew, and talk again. But, I would think they're all gaming, the U.S. because they know that we'll get involved for the obvious reason.
And John, on the economic front, it's all about jobs this week. What are you seeing there, particularly obviously now the easing cycle is underway as far as the Fed's concerned?
Yeah, Andrew, initial claims for unemployment in the United States are pretty stable and low. Layoffs are not high, even though we saw, the JOLTS numbers move around. The layoffs are not showing up. So what I hear from consensus is a 145 number for Friday, which, I sort of agree with. I don't imagine it'll be any more than that. And we get a 4.2% unemployment rate, which is also what consensus expects, which I would expect. Also not going to create any drama for the Fed. So we basically going to find out that the Fed is going to stay the course if those types of numbers show up, which I think should be all of our base cases going into Friday.
All right. How are you feeling about where the equity market is at the moment? Of course, we're taking out new record highs. Certainly we've seen that most recently, but we're not overnight. Obviously, we did see that turning negative. Nonetheless, do you think those gains are sustainable?
That's the $1 million question, Andrew. One thing I learned writing my equity strategy report this month is that, in October is when the clock turns from a fair value of the end of 2024 to a fair value of the end of 2025. So the market starts to look all the way to the end of 2025 now. And I get a fair value of 55.60 in 12 to 14 months. So if we're at 5,700, we're kind of pricing in all of next year already. So that is that aggressive? Absolutely. Is it very aggressive? I don't think so. So in a momentum trading market, it's hard to not imagine that there's some level of rationality to the momentum trading still. So I just think people should understand now we're pushing this fair value outlook into 2025 and eventually even 2026 to justify what's going on.
Well, let's take a look at the stocks you're focused on at the moment. You always, with this segment, bring us 3 stocks. Let's get there. The first one being the cybersecurity stock Fortinet. What are you watching?
Fortinet, Andrew, this stock is just phenomenal. They're getting up to the highs here. You can see this stock, if it takes out those highs from mid last year, we can get a nice run out of this stock. I don't think you see annual earnings revisions like this very often that are so clean. So you can look, 25% annual growth in cybersecurity, which this company is a dominant player in, is to be expected. And earnings surprises, those green arrows that are showing up there, Andrew, are double digit, 30, 40, 20% earnings beats. So cybersecurity and a top firm in it, Fortinet, you just have to like this, particularly if it pops out, takes out that high back in mid-2023.
All right. The second stock is in the gaming space, Flutter. What sort of growth are you seeing here?
Yeah, Andrew, down in Australia, I think this is sports betting or sports bet, I think is the name of it. But this is a recently IPO'd stock. And this has been really a happening play. I don't have enough information on it other than what you can see there, which is again 3 lines that are moving in the right direction for gaming. So this is a global gaming stock that's probably got it figured out for sports betting and how to do it. So, I would say, looking at this chart, we're at all of the back to fair value. This is all the way into 2026 numbers. So I think Flutter, the main point here we should point out is this is exactly what I'm talking about. A stock that's pricing it all the way out to 2026 already.
And thirdly, you're taking a look at Swire Pacific. Investors here may be more familiar with one of its brands, which is Cathay Pacific.
Right. So this is Cathay Pacific. This is actually, Andrew, a very old British company. It goes back a couple hundred years. In fact, some of the divisions, China focused. And the thing to notice here is it's at $8 a share. So, if we do get China stimulus, stocks like this are super attractive from an earnings perspective when you get a stock price of $8 a share. So the thing to point out here is, again, you got a really nice chart. And if it takes out those 9.5 highs, it can get growing up to 10. So when you're at $8 a share going to 10, that's 20% return on an annual basis. So that's what I like about stocks like this is, people don't really think about them. You get a nice catalyst from the Chinese stimulus. People start, moving out of the major players at some point, moving to stuff like this, and it works.
Chief Equity Strategist and Economist at Zacks, John, thanks for joining us.
You bet, Andrew.
Quick look at where we're likely to get going on the local market. As you can see, looking for a flat opening here, marginally positive, but bearing in mind what we saw on global markets overnight, which is mostly negative. So that will be a watching brief when we get underway, and clearly a focus when some of those commodities, given what we've seen out of the Middle East, in particular energy and also gold, doing very well overnight as investors seek those safe havens. Stay with us. The open is just a couple of minutes away.